Welcome everybody to the monthly Ask Your Advisor Anything. We have a guest speaker today, Rick Rule, and he's got half an hour with us, so we'll kind of jump right into it. But we coming off the back of Boca Raton, another great time in Boca, Florida, 2 weeks ago. I was there. I was super busy. Had a lot of fun. But Rick, I don't know if you want to give a brief overview of sort of this year's highlights, and then we can jump right into questions and answers.
I think there were a few highlights. First of all, when people ask when is the bull market going to begin, the fact that conference attendance is up 100% in 2 years likely tells you that the bull market has begun. A second example would be that at the 2024 symposium, the audience was interested. They were studying diligently. They were asking great questions. They were working hard. At the 2025 symposium, they were buying stock. It was a very, very different response. So when people ask me when the bull market's going to begin, it's here. What that might mean for speculators who've been around a long time is that you need to be more careful. In other words, we're not talking about a contrarian activity anymore. We're talking about stocks that are dirt cheap. What we're talking about now is a market where there are dichotomies in value, and where momentum is on your side, where the time frame between the time you make an investment and the time you get paid for making an investment is shorter. But there is more risk simply because stuff is not as cheap. Looking at the macro panel, I thought it was lovely that we had a diversity of opinion. Jim Rickards, with a great background on Wall Street and law and the CIA, told the audience that Trump's economic policies were hard to understand, but they were going to work. David Stockman, who ran the Office of Management and Budget under Reagan, basically said bullocks. That the big, beautiful bill was nothing of the sort, merely big. And I guess most of the panelists, and myself included, fall more on the David Stockman side of the ledger than on the Jim Rickards side of the ledger. But I would hasten to add that I'm a credit guy. I'm not a global macro guy, which is why I was not on the panel. For me, a credit guy, when you have your debtor $130 billion upside down, or put differently, where your debtor owes 4.5 times GDP, you have a problem. And there's no amount of narrative from my point of view that overcomes that. It was useful to me to hear Joel Lippman talk about the fact that the debt, while it has to be dealt with, is manageable. He points out that within 5 years, U.S. tax collections will be in excess of 50% of the total tax collections in the world, and we don't have 50% of the debt. I guess he's saying that we're less screwed up than the competition. But he also pointed out that there's a lot of liquidity in the American system and that American companies are unusually capital efficient and generate unusually high returns on capital employed. A useful sentiment. It reminds me overall of what Robert Friedland said at the conference 3 years ago, which was, quote, "The situation in front of us may be hopeless, but it need not be serious if you yourself prepare and organize your portfolio in a way that deals with it." I think it's probably pretty clear to everybody on this call, it's certainly pretty clear, I think, to everybody who was at the conference, that we're not in 2023 anymore. We're not waiting for the gold bull market. We're in the gold bull market. Leadership has changed this year from the bullion to the senior producers, changed convincingly. That's consistent with the experience in the last 3 precious metals bull markets. If this bull market continues, which I'm personally confident it will, you will begin to see market leadership change even further down the value chain. And ultimately, I believe, when the generalist investor comes into the precious metal space, they aren't here yet, but when that happens, if past is prologue, you will likely see commodity price leadership go from gold to silver. When does that occur? I don't know. When people saw silver flirting with 40, they said, "Rick, is this the breakout?" My answer to that is that when the breakout occurs, you're not going to need me to tell you. It's not going to be a dollar move or a $2 move. It's going to be a much more dramatic move. But I can't tell you If that occurs a month from now, a year from now, or 2 years from now, I don't know. What I do know is I've been through 3 precious metals bull markets in my life, and concurrent with the generalist investor coming into the precious metals space, market leadership transfers from gold to silver. I think I'll leave it there, John. I hope that's the type of overview you were looking for.
Yeah, perfect. Thank you. So I think we'll jump into questions and answers. I'll kick it off actually with a question myself. You frequently have said many times, just here in the office and on YouTube, that don't mistake the bull market for brains. Have you looked at all into, if you sell here and move to the credit side of things, staged exits or that sort of thing? People are doing well right now. They're patting themselves on the back. I fear they'll jump on the juniors after, or just bad quality. I know that's a very broad sort of statement. Don't mistake bull market brains, but how would you maybe tie that down to something more actionable?
Well, first of all, work on your brains. If you're going to go down the quality trail, if you're going to speculate, then do the work. I would prefer, of course, that you did the work at the Rule Classroom, which is free, very good price. But however you do the work, do the work.
Perfect. All right. Second question to kick things off is just rare earths are obviously on the topic. You had a few there at the conference. You saw the Department here, Defense here in the United States, put a floor under the pricing. Do you feel other jurisdictions, countries will have to do the same in order to have their local deposits work, or will we see a bifurcation?
I think that's what has to happen now. Rare earths has begun to be politicized. And what Trump told the world is that he was going to save the world from the Chinese. What he didn't tell the world is he was going to outbid the world. With Trump and the U.S. State Department talking about overtly subsidizing the rare earths business, both by way of maintaining floor prices for commodities, but also by offering direct finance to rare earth operations in the U.S. and abroad, he will force the Koreans, the Japanese, the Europeans. He will force anybody that has supply chain needs in microelectronics to do the same thing.
Okay.
He is not putting in place these price supports to subsidize West German electronics manufacturers or Korean manufacturers or Japanese manufacturers. And those countries will have no choice but to finance their own supply chains.
Yeah. That's your liquidity. I know in an interview on the Boca, you mentioned you save in gold, but your liquidity is in dollars. So
That's correct.
Yeah. That's
correct. I would urge everybody on the call, if they have any spare time at all, to construct a small alternative balance sheet and income statement to the extent that you have gold. I began doing it in the year 2000. I sort of tried to reorganize a bunch of my life at the change of the century, change of the millennium for that matter. And I increased my systematic allocation to physical gold. And I began to keep track of my income, my expenses, all that kind of stuff in gold as well as in dollars. And if you do that thought exercise, I've been doing it for 25 years now, it's really remarkable what you learn. As an example, priced in gold or silver, houses today are cheaper than they were in 2000. Food is much cheaper. Energy is cheaper. If you measure your net worth, your income, your expenses in dollars, you end up with one perspective. If you measure it in gold, you end up with a very different perspective. And if for no other reason than to understand the pernicious decline in purchasing power of the US dollar, subjecting yourself to an alternative accounting in gold is a very good thing to do.
Right. Good exercise.
Early on, the first time I really spent time with Eric Sprott, he was sort of asking me how not my investment practice, but my speculative practice went. And I said, I'm from a credit background, and I've learned that if I moderate my risk in a business where the rewards are as great as they are here, that the upside takes care of itself. And he started laughing. And he said, Rick, I'm exactly the opposite. The rewards are so great that I know that one winner will amortize a lot of losers. So I take a bunch of disaggregated shots. Neither way is wrong. Eric is 10 years older than me, but he's substantially wealthier than me. So it might be that his way is right and my way is wrong. But my way works for me. And it's important, if you're going to be a speculator, that you develop a course of action that works for you. My speculation is really about a couple things. It's about being a contrarian. It's about trying to participate in activities where I don't have competition and where my cost of entry is very, very, very low.
I do have another one for continuation from when you mentioned do your own work, and then a 5-year time frame or longer. I don't know if dilution is really thought of enough if things prolong and for no fault of the company per se sometimes. And then the geology of understanding that geology. How likely are you able to grasp and do the work of geology, especially with the juniors? It's different perhaps for the seasoned producers, but thoughts on that?
I've spent a lot of money on geology. During the time you've been with us, John, I've probably employed, 4 or 5 different geologists.
Yep.
And I got to say, I have good taste in geologists. You have a great one working for you now, Justin Tolman. The firm probably needs to spend some money, given that he's doing more portfolio management on geology. Again, a commercial for the Rural Classroom. We probably have 15 geologists that are members of the Rural Classroom who are often happy to opine on geology. Depending on how much money you have invested in a position, it may be worth your while to retain a Brent Cook or a Borden Putnam. They're actually very cheap. If you have, let's say you have $100,000 or $200,000 in a position,
yeah,
and you can spend $1,500 on a really high quality geo to do some work on it. That's 1.5% of the value of your position. Often money well spent. I've spent millions on information and analysis.
Yeah, agreed. And then that's one of the biggest lessons when I first came to Sprott is just how far behind I was in the educational factor of geology specifically, and if not everything else. And then dilution. It's everywhere and always as its name as inflation, into my definition, monetary phenomena. But
well, dilution. I guess I like to be the diluter. I believe that money is made on the delta between the value of a share and the price of a share. And if a company is able to sell shares at a substantial premium to their value, it's not dilutive, it's accretive. If, by contrast, the company is forced to sell shares at a substantial discount to the value, it's dilutive rather than accretive. If I'm involved in a company where I think they're selling at a premium and they're issuing shares, what they're saying is that my money is worth more than their shares. And I am likely in that circumstance to join them and sell some shares. They know the value better than I.
Any chance of the second conference per year, or
I'm too old, John. I'm too old. At 72, I'll tell you what. Flying home from Boca Raton, let's just say I slept well. I'm able to keep the pace at the conference because I enjoy it. I get through on adrenaline. But at the end of the conference, I'm like a beach toy where somebody pulled the plug out of the air spigot. I just, I don't have more than one in me.
Got you. All right.
I can tell you that I personally save in gold and I maintain liquidity in dollars. I consider gold myself not to be an equity alternative, but rather sort of insurance and bedrock savings. So it occupies a different part of my portfolio. I think there's a possibility, maybe even a probability of an air pocket. I don't know if it occurs in 25, 26, 27. And because I'm uncertain as to the probability of it and to the timing of it, I don't trade against that particularly. I maintain gold because it helps me sleep nights. And at 72, that's a blessing. I've got to jump off, gentlemen. I have to be on another call 2 minutes ago.
All right.
So
Thank you. Rick.
thank you all for your time. I got to
Very good.
run.
I'm staying around, everyone, but thank you, Rick, for your time.